Welcome to today's edition of Press on Leadership Forum. I'm your host, Webster Twambo Jr., the chairperson of the Press on Foundation. Today we're looking at insurers' response to emerging risks. But before I introduce my guest, please remember to invite friends to this program, tag them, invite them, and remember this is an interactive forum where you can ask questions, and we'll do our best to address all those questions or concerns that you may have regarding our topic. So today I'm joined by very special guests with a combined experience of about 70 years in the industry. So I'm joined by Mr. Ashok Chawla, an insurance professional. Mr. Chawla is a chartered accountant, a banker, an insurer with qualifications from the US, that's CPCU. Those in insurance, I know you know what these mean. He's also he has qualifications from the Chartered Insurance Institute of the UK, as well as CIP Canada. He's got various other insurance qualifications from LOMA. He has over 11 years experience in the banking and finance sector, and 32 years in the insurance industry in Zambia at senior and top management and board level. Actually, Mr. Chawla at some point was our MD at Professional Insurance. Mr. Chawla, welcome to the program.
Thank you, Webster. Everybody, good evening.
All right, thank you. Then we also have my namesake, Webster Chigwende, CEO of Emeritus Zambia Limited. So Webster is the managing director of the Emeritus Zambia. He has experience in both the Zambian and Zimbabwean insurance markets. He's taught reinsurance as a one-time part-time basis at National University of Science and Technology, NAS, that is Zimbabwe, as well as UNILAS here in Zambia. He also trains across the COMESA region. He holds an MBA in strategic planning, as well as an MBA from NAST, as well as a bachelor's degree with honors in insurance and risk management from the National University of Science and Technology. He's a chartered insurer and an associate of the Chartered Insurance Institute, and he serves on as counselor and he served as counselor and later president of the Insurance Institute of Bulawayo, and as well as chair of the Reinsurance Council and board member of the Insurers Association of Zambia. He sits on several boards. And so welcome, Mr. Chigwende.
Thank you, Webster. Maybe for the sake of this session, you'll be Mr. Twambo and I'll be Webster.
It should be the other way. All right.
Maybe we can say Webster 1, Webster 2.
Okay. All right. So the only lady who deserves a special introduction, the only lady on the panel, Barbara Mwandila, the Chief Executive Officer at Hollard Life Zambia. She has 23 years experience in the financial sector with vast experience in tax audit, fraud investigation, claims management, underwriting, reinsurance, and sales. She has worked for the insurance industry for 15 years at management and senior management level, and has experience in both long-term and short-term insurance. She also has experience in microinsurance, both in short-term and long-term. She holds an MBA and a BA from UNZA, and she's got several post-graduate qualifications. So Barbara enjoys mentoring, empowering, and developing others. The only lady on the panel, welcome to the program.
Thank you.
All right. So as we get started, I'll just give an overview of the of our discussion today, as we look at insurers' response to emerging risks. So more than ever, insurers today face unprecedented degree of change and uncertainty that appears to be developing at an ever quickening rate. So emerging risks can be new and unforeseen. They have the potential to cause loss or harm that is not fully known. So in strategic risk management, these risks might be classified as known unknowns or unknown unknowns. A significant portion are by nature not observable by using traditional or conventional methods. However, their impact will be felt by all. So in Zambia and Southern Africa, for example, in the 2018-2019 farming season, we saw unprecedented droughts. The Kariba Dam recorded the lowest water levels. This resulted in load shedding, and the consequences were felt by everyone. So farmers in Southern Province recorded experienced severe droughts leading to loss of their crops, and this threatened food security. So when we come to the technological side, rapid technological advancement has come with increased cyber risks. In the recent past, for instance, we have seen where cyber attack, which hit nearly 100 countries around the world, with more than 45,000 attacks recorded in different countries, including the UK, Russia, India, China, and parts of Africa. So according to media reports, the attacks may have originated with theft of cyber weapons from the National Security Agency, NASA. So for instance, in US President then Barack Obama's private emails hacked with, while more recently we had celebrity David Beckham, who was one of the high British net worth individuals targeted by hackers. So we can go on and on. For instance, in Zambia, according to the PwC 2014 Global Economic Climate Survey, Zambia, cybercrime is indicated as a key concern for organizations, with 22% of respondents in Zambia reporting cyber crime compared to the 21% of Africa respondents and 24% of global respondents. So the estimated financial loss from cybercrime is around $100 million. Yeah. So, having said that, the most unsettling emerging risk in the recent past is the COVID-19 global pandemic. As at today, the number of infections stands at over 22 million globally, and in Zambia, the figures are at over 10,000. So this risk is definitely unsettling. So having given that overview, I would like us to maybe the panel. I know there's cross-cutting experience from general insurance, life, and reinsurance, and all the people on the panel have got this experience across. So maybe as a way of getting started, I would just like to ask. I'll start with Mr. Chawla. From the insurer perspective, maybe we can pick on general insurance. I know you are still well experienced even in life. I mean, you have the knowledge. But maybe from the general insurance perspective, how would you define emerging risks, and what are the major concerns or issues for insurers? And then the same question we'll tackle it from the reinsurance perspective and the life insurance perspective. So, Mr. Chawla, you can pick it from there.
Thank you, Mr. Twambo, as we'll be calling you Mr. Twambo. Yeah, you rightly said the emerging risk has two dimensions. First is known unknown, the other is unknown unknown. One is developing, the other one is known, but dimensions are changing. Now, Technological changes are so vast now, so rapid, but we have to definitely foresee and forestall the risks which are emerging. If we don't do that, the consequence will be very, very, very dire. I am sure that you'll talk about pandemic later. You'll talk about other, as you mentioned, cyber attacks and all those things. Now, there has to be done because the main function of insurance is to protect their customers from damages, from losses. At the same time, they have a other dimension. It's not only the protecting them, it's the protecting the society, not even not customer, but as a whole the economy, because they are risk. They know the risks. They know the consequences of risk. You can compensate. You can indemnify the financial side. What about the other side? The loss of jobs, the loss of economy. The consequences are dire. So emerging risk is a right topic you chose, and it's the right time. And as we unfold, we can talk about the consequences and what we can do to mitigate the losses and reduce the effect of these things.
All right. Awesome. Mr. Chigwende, or is it Webster too? I'm not sure if we have agreed on how we're going to address each other here. It's the conundrum.
Thank you, Mr. Twambo. For me, when you talk about emerging risks, I look at them from basically three perspectives. We are talking about risks that we do not have knowledge about. And in this category, probably I would put things like, technological, aspects, and looking at things like a change in law. So these are things that we'll just be witnessing for the first time. Then we also have got what we call latent or crystallizing risks. These are risks actually which will be developing in the background without us knowing them. And the only way we'll get to know about these risks is when suppose they condense and then we start having an effect from the precipitating effects of the risk is what now will be affecting us. And if there were risks that are dormant, it means that the radiating effect of those risks now will start be affecting us. And the last category is of those risks that we have always had. We know them, we have responded to them, but because they have got evolving or mutating characteristics, so we have actually to look at that aspect also as the blind spot. But the first two I described, actually our interest as reinsurers is the gray matter there, the absence of knowledge that we have, and that sort of those risks then will make us be informed in terms of what models we have to employ to look at the exposures to our portfolios, and definitely go into other strategic decisions to do with the products that we offer, the pricing, and as well as where we can deploy our capital in terms of optimizing the capital we have. Thank you.
Thank you, Madam Ba.
All right. I'll also look at the risks also in the two forms, which is really risks which are new and with new conditions, and also the risks which are old, but they keep evolving. And when you view these risks, you'll discover that some are actually slow-paced and some are very fast-paced. I'll take an example of technology, which is fast-paced, and in that line, you can actually find new risks and old risks. You'll find old risks in there that they keep evolving because every day there's something new coming up in relation to technology. And when we come to the slow-paced risks, those are the ones which are influenced by the demographical and societal changes, and they usually take much longer to manifest. When you were opening, you actually alluded to index cover, which is affected by climate change. So you find that one would be put under the slow-paced risks because they will take so long to manifest and they're actually affected by nature. In relation to how it concerns us as insurers, when you look at the fast-paced risks, It means we have to keep evolving with it. We have to continuously study the risks and come up with ways in which we can mitigate it. Yeah, and we also have to come up with ways in which we can protect our customers, because remember, as the risk is evolving, it means we're leaving a part of it uncovered, as Webster said. So as insurers and reinsurers, we actually have to move with time to make sure that our customers are properly covered, and also our businesses, because if not handled well, it can actually stress the capital in the organization and you might end up closing.
Awesome. All right, so those who are joining us, this is the Press On Leadership Forum. Today we are looking at risks, and specifically we are looking at insurers' response to these emerging risks. Do let us know where you're watching from, and if you can get us loud and clear, it will be very important just to let us know that you are watching, so that we know that you are there. All right, so as we progress in our discussion this evening, my guests, I would like us first to narrow down to the COVID-19 pandemic, the pandemic which has ravaged the world. The whole world has been affected. Now, from the insurance perspective, I know there are so many risks that we can talk about, I mean, emerging risks, but maybe starting with the COVID-19 pandemic. To maybe, Mr. Chawla, to what extent has this pandemic unsettled insurers? Do you think this pandemic was predictable by insurers, and what was the to what extent were insurers prepared for this? Mr. Chawla.
Yeah, thank you. You see, from my perspective, the way I see it, it was predictable. Because SARS has been happening, Ebola has been happening. The magnitude, the severity may be different, but it was predictable. As Webster and Barbara were saying, that risk has been mutating. So same way, virus has been mutating. So I will say that we were taken off guard. When it originally was, originally it came out, people didn't take seriously. The governments around the world, they didn't take it seriously. They were not prepared. So that's the purpose of this discussion now, is they were aware of emerging risks, but they were not prepared. They were not able to, investigate it, detect it, and plan for it, to work out the preventative, measurement, how to prevent this. And if it happens also, if it reaches our border, what do we do? So it was predictable. The severity may be different, but frequency may be different, but it was happening. It's a known risk, unknown consequence.
Yeah. Yeah. All right. Mr. Chikwende, you would like to comment on the same?
Yes, for me, this COVID-19 was indeed unsettling to insurers, in the sense that it has really reduced the profitability of many companies. I think we have had many reports coming from some of the big reinsurers. Find Munich Re actually, as at mid-year, had paid something like 700 million euro, and their profitability fell by 65%. And one of the big reinsurers is Swiss Re, had a net loss of 1.1 billion, having paid about 2.5 billion in COVID losses. That is indeed unsettling. And the other thing is that the losses have had a significant effect on the reserves of reinsurers. And you will now be sitting on the edge, because what if another pandemic or another catastrophe strikes? Then definitely that will affect the health of the portfolio. And of course, we have got the aspect of envisaged reduction, in revenues, because of what has happened with these lockdowns and so forth. In terms of whether people did predict, that one is a very tricky one. I think as I was trying to, the only reading that I came across was of Bill Gates. I think it was 2015, where he was talking of pandemics and so forth. And I've also seen on social media where people were talking about the the 1920s influenza that is happening after every 100 years, but there is really no evidence to say that it will really have been predicted. And also in terms of preparedness, I'm not sure. I will take a slightly different view from Mr. Chaula. It's actually a difficult call to make, but I would rather be hypothetical about it and say, to the extent that reinsurers or insurers were able to pay those claims, they were indeed prepared. And to the extent that they tried to contest paying some of the claims, I think some insurers going to courts and so forth, it shows that they were not prepared. And to the extent that they've had to rely on reserves for other classes of business, it means that they were not prepared. So I'd rather take a hypothetical view on that one. I think it's still early days. Maybe we might have to tell after we see what will come, at the end of the year, the performance of the industry. Thank you.
All right. Okay, that's you've brought a very important dimension, and maybe as I pose a question to Madam Barbara, when we look at travel insurance, for instance, many clients were reported to have failed to claim for business interruption. We start with business interruption losses, and also travel insurance. So what were these issues, and how can clients be confident going forward that all these policies will be able to respond? So are you able to pick it from that dimension?
Sure. Looking at travel insurance and why some customers failed to claim, really it's because of the kind of products they were getting. If for example, if a customer got a basic cover, which is a very minimal cover for about maybe 100 kwacha or 200 kwacha, definitely it will not have cover relating to pandemic. And remember, yes, it was something that was known that would have a pandemic, but we didn't know exactly when. So you discover that a lot of policies were structured in such a way that they were not clear as to whether it was covered or not. So the moment it started happening, we experienced a lot of customers failing to claim because it was not on their cover. But quickly the insurance industry evolved and they started putting that as an additional cover, especially even on the life products, without even a waiting period. So really, I think it's something that we're all going through as insurers and as customers. And what was important was that the insurers learned that really it was going to affect a lot of people and for a very long time. And it's something that they actually had to cover. You discover on travel insurance that when someone takes it up, you're actually on cover when you're abroad and not within your country. But we experienced a situation where someone bought a ticket and before they could travel, there was a travel ban and they wanted to claim. And in such conditions, the insurers were refusing for a simple reason, because the primary insurer on travel insurance is actually the airline. So if the airline is actually able to reimburse the customer, then the insurance company doesn't come in at all. Because remember, travel insurance is a policy which indemnifies you. It covers for that loss that you've suffered.
All right. So I have a specific question for Mr. Chawla, but before he comes in, Mr. Chigwende, the BI losses when it comes to general insurance, the clients found themselves that they couldn't claim because there was no material damage. What's your comment or what's your take on that?
My comment is that actually, in the general covers that we give property, actually, they've got a condition that there has to be material damage first for you to claim, for BI. But except if maybe it was like a contingent cover, which would allow you to also, claim for BI without material damage and so forth. And also there are other policies as well which can cover without BI, like event cancellation, policies and so forth. But the issue really was to do with the interpretation of the wording. I think we have actually learned a lot from the South African scenario, where I think insurers were actually contesting the fact that the BI losses were not as a result of an insured peril, so to speak, because it was the government that instigated the lockdown. I think that's where the condition was, because in their view, they were saying if it was government which came in, then that would make it a fundamental risk, and it's government really which has got to show that the amount of losses that will come from that particular action. So, but what we have seen also from the courts is that the courts have interpreted it in such a way that whether it was government or otherwise, the issue really is that in offering that cover, the intention was to compensate clients, and therefore insurers should pay. Thank you.
All right, and we will be able to see a lot of things unfolding as we progress during this period of COVID-19. So maybe a specific question for Mr. Chawla. I know outside before this meeting there was something that you posted, and I would like you to just pick it up, and I'll just read out this question and see how you can address it. So, does a visitor, and before I even read out this question, I think I've seen a few posts on social media regarding the same, in terms of liability to people who visit, who contract a disease at the premises, or illness at business premises, and so on and so forth. So the specific question that I'll pose to Mr. Chawla: does a visitor to a commercial outfit, hospital, clinic, or office who gets into contact with a sick person, vis-a-vis an employee or another, so sickness in this context, not necessarily COVID-19, it could be sickness like flu, an industry related exposure. So does such a person has any right to claim against the business or outfits, its employees, other sick visitor under law or tort? Are present liability policies in Zambia structured to indemnify business and house owners, individuals, against such potential exposures? I know this is a packed question, but I hope you can unpack it and just shed some light on the same.
Thank you, Lester. Before I go to that question, let me add something on business interruption. I think we are overlooking one cardinal point. Insurance has two types of policies. One is named perils, other is all risk. When it comes to named perils, yes, it may be excluded, pandemic, because normally we talk about physical damage by a named peril, and the burden of proof there is on the insured. When it comes to all risk policy, as long as it's not excluded peril, specifically exclusion is not there, that risk is covered. So it depends the product which has been sold to the insuring public in Zambia, if it's an all risk policy, or pandemic has been included there. And we know the pandemic consequences are the offices will be closed, the business outlet will be closed, whether by government directive or on their own to protect themselves and protect their customers, their employees. So that loss will be covered. So it depends what each product was issued. And I know one policy in Zambia, which includes pandemic. Even in life side also, there's no exclusion on pandemic. So the person dies, it will be covered. So having said that, we can discuss that again if somebody wants to chip in and this thing. Coming to liability side, you rightly said law of tort applies to everybody. We are supposed to take due care, whatever we do in our personal life, in social gatherings, in our offices, in our homes. In office, if you're open for business, it's an open invitation to the public. Come and buy the goods. When I walk in a Bata store or ShopRite, I expect them to have a good environment, a risk-free, not that they're putting water and washing it when public is walking in. and night shift there, they are liable for that. Similarly, if the ventilation is not good, they know, we can come back to pandemic also direct if you want. If they know that these things are going on and they don't provide sanitizer or good quality, they don't provide proper ventilation there, people are sneezing and somebody gets affected, they're liable for that. Because when you invite public, you have to give them an atmosphere, an environment which is conducive, free of injury, free of diseases. If you have a sick employee also, it's your duty to tell him, please go. Because other employees can get. So employees liability there, public liability there. I think that's in nutshell I can say. Nutshell that the due care application is quite rigorous on employers. As you go bigger organization, it's a more rigorous. Micro, small, medium enterprises, the level will be low. When it comes to multinationals, it will be much higher. Same, let's take an example of mining. We know that the atmosphere underground is very hot. So you have to give them dust is there. So you have to provide those gadgets. If I come an inspection there and you take me there without helmet, without breathing equipment, or without light, I get hit somewhere, I get injured. So definitely there will be life. That's my contribution.
All right. Still on the subject of yeah.
Yes, Webster. I also wanted to comment on the same. Okay. Sorry, can I proceed? Okay, thank you.
Go ahead.
I also wanted to. Okay, thank you. I also wanted to comment on the same with a slightly different view. I think, especially when you are talking about liability, when relating to COVID-19 and so forth. The way I would look at it myself is that, when we talk about liability cases, they are actually hinged on a negligence, not a strict liability to say, like what we get on contracts and so forth. So the issue here is that, it will be very difficult actually to say you claim, you go to a shop and you say I've contracted, say, COVID-19. And so it will be very onerous to prove, because for all we know, COVID, when you contract it, we are told symptoms will start exhibiting after, some time. We won't be able really to trace that I contracted it in this particular supermarket and this particular time and so forth. It becomes very, very difficult. It's quite onerous for somebody to prove, because those who have suffered from COVID, most of them, I think the testimonies that I have watched, they are not really able to pinpoint where they were, where they caught the disease and so forth. So that's another angle to it. And also, if, say, that particular institution, like what Mr. Chawla was saying, if they followed the health protocols that were set by the Ministry of Health, everything, then how then would you, hold them accountable? So it's another angle maybe you need to, unless, where for things like injury and so forth, I think those are straightforward. But coming to disease, I think it might be a difficult one.
It would be a difficult, yeah. All right, Barbara, any comment on COVID-19 pandemic?
Yes, I wanted to comment from the life perspective. Definitely, it would be very hard to be indemnified if you suffer from COVID, like my two colleagues pointed out. However, if you look at the life space, we have considered certain industries which have been hit. Like if you look at the tourism industry, where they had to be sent on leave. And some of them, it meant that they were not going to be getting a full pay, probably just a basic pay, right? And we did come up with measures on how we could actually put some relief on them. We partnered with the financial institutions, and they were able to defer their installments on the loans, for example. So the industry was actually reacting to what was happening, and they're actually aware that some people will be able to, like some people will lose jobs during the process, and they're also aware that some people will not have enough income for a period of time. So I think we're all ready in terms of impairment, because we do realize that if a person loses their job, they would not be able to actually settle their loan. And as such, the bank will have to kind of like claim from us, and it is insured. If you look at the credit life policy, the way it's structured, we actually are able to cover loss of employment for a period of time, depending on how a policy is structured.
All right. Awesome. So as we progress in our discussion, I will be reading out comments as well as questions. I have a few comments here. Jenny is following. Elika, very insightful. Thank you. David Kunika, getting you loud and clear from Lusaka, Zambia. Elika, watching from Roma. Victor Jalavani, very insightful. Limon is following from Kawe. Mike Ondrovo is following. Kondwani Ziambo, very insightful discussion. Mwamba following. So we call I agree with Mr. Chikwende on preparedness. This one on the I guess it should read, this is one of the reasons most insurers are putting COVID-19 among us exclusive. Then Charity Christine Trey is watching from Kinshasa. We have Brian Gulube who is saying very interesting and educative. Andrew Sinyangwe is saying great insurance information here, watching from Solwezi. Wisdom is following. Dan Mulu following, very interesting discussion. We have Ntinda Kabaso who is saying very interesting. So very soon we'll be addressing questions that those of you who are following us are posing. So keep the questions coming. Remember, you can invite your friend, tag your friend to come and join the conversation. So having looked at the COVID, and I know this is a developing issue, which I think as we go on, since it was unprecedented, it's an emerging risk. So I'm sure a lot of issues will be unfolding, and a lot of innovations and solutions will be coming along as we progress. So maybe in the interest of time, let's move to technological risks. Like I pointed at the beginning, cyber risk is one of the major threats affecting all. So what are the concerns with respect to individuals, and what are the concerns concerning commerce and industry? Do insurers have a solution to these risks? What could be the challenges for not addressing these risks, particularly in reference to Zambia? So this is a bundled question or point of discussion. So I'll allow the panelists to unbundle it. Who goes first? Mr. Chawla, you'd like to go first?
Yeah, thank you. From individual point of view, cyber risk is e-payments, their bank statements, their bank accounts hacked. So yes, there are products available, additional extension, what we call, under their homeowners, under their household contents, those extensions are given. For commercial institutions, there are products for banks, for organizations which need them. And this risk is not only limited to individuals and commercial organizations. It's much more wider implication for the government also. Because cyber risk is not just about money. As somebody was using the word ransomware, election monitoring, election manipulating. We know what happened in America, they're talking that. So cyber products are there, but products are available only for indemnifying the financial losses, not beyond that. Because cyber risk is mobbing, bullying. We don't have products for that at the moment. Because people can slander you, libel you. For that, we don't have products for that at the moment. Though we have products for personal injury, there's a product for that, which can cover this also. But the sum insured, the liability limits will be much lower. That's what the way I see it. But it has to grow. It has to improve. We have to draw a plan, mitigation plan, and come out with something. I'm talking from Zambian perspective. We don't have, I have not seen any product on personal injury in Zambia, especially related to cyber attack.
All right. Madam Barbara, you want to come in?
Oh, yes. In terms of cyber risk, I think there's a lot. If you look at individuals, for example, you can lose your identity. You can lose your personal data relating to maybe the business that you're doing on behalf of your organization. You can lose your income. And I think the list is endless. So what we're doing about it as insurers, as Mr. Chaula put it, in terms of someone losing their personal data or their identity, really in Zambia, we haven't come up with such covers unless I'm not aware of it. But we have a cover on Visa. So if someone is actually buying goods online as an individual, right, or even as a corporate, and before you finish the transaction, your money is deducted and you're actually not even able to get your goods, or you are able to prove that you never completed the transaction, you discover that you'll be able to get a refund, and that's because your Visa cards are insured. And the other thing that you'll find that we have insurance on is when someone is transacting online, for example, they're in Zambia, and suddenly you see a lot of transactions on your account from abroad, the bank will actually be able to reimburse you those monies, and that's due to insurance cover. So we are operating in that space. We don't have products to cover just about everything. And as we mentioned in our discussions earlier, when you look at technology, the pace is very fast. So we're trying to actually catch up with that. And to make it easy, insurance companies have come up with the enterprise risk management framework, where you actually have a group of people or a number of people in an organization who are there just to monitor the emerging risks in that space or in relation to another kind of risk emerging from maybe even natural disasters. So that should such a thing happen, they would have actually predicted that it was bound to happen because of the way the setup is or because of the procedures, and they're able to actually identify the loopholes, assess the risk, and after assessing the risk, they're actually able to isolate them and come up with ways in which we can mitigate them as insurers. And it's through that that we're actually able to come up with opportunities as well, business opportunities.
Awesome. So I think since there are two men on the panel, for every opportunity given to a man, you have double. I'll double the opportunity or the minutes for you, since you are the only lady on the panel.
Thank you.
All right, so Mr. Chigwende, any comments on technological risk on cybercrime?
Thank you. I think just one more thing to add in relation to personal exposures. I think with COVID, what we have seen is that many people are now operating from home, and the vulnerabilities actually have increased because we are not operating, from office space whereby maybe there might be appropriate firewalls, to defend us from some of these cyber attacks. So it's actually an increased risk exposure. And then coming to industry and commerce, the issue really is that any entity is part of an ecosystem. It either feeds into it or is fed by it. So when we have got technologies linking, it means that anything to do with cyber is going to affect your supply system, is going to affect your interface, and also, most importantly, your research and development. I think we are aware that with this COVID, many people are racing actually to get the vaccine for COVID. So you can imagine that when you think that you have reached the finish line, somebody hacks and takes your technology, and maybe demands something and so forth. So that is very, very important for insurance. In that case, therefore, it would be of interest to cover the clients for business interruption, sometimes for the cost of communication to your clients, to advise them of what would have happened to your system and so forth. So these are some of the exposures, like Barbara said, insurance will take up. In terms of challenges, I think locally, my own observation is that demand is very, very low. I think there is this perception that it's a remote risk. Cyber risks are remote, but I don't think that they are remote. What I think myself is that it's just that it's a crime that goes unreported most of the cases, because we feel embarrassed that we have lost something, But really, it's an area that insurers, can do more for our clients. Thank you.
And talking of uptake, I can see there are a few questions that I'll ask. But before I get to the questions, just keep them coming. We'll be addressing the questions shortly. But now let's talking about uptake. We have seen PVT, political violence covers, and terrorism, and so on and so forth. The uptake of this form of cover Zambia hasn't really peaked. That terrorism continues to be an emerging risk world over. So we know that this risk has been with us for years. So why has it continuously been referred to as an emerging risk? And a number of products, like I said, covering terrorism have failed to make an impact on the insurance market. What could be the reason? And what are insurers doing to address these issues? Mr. Chawla, you want to go first?
Thank you. I can go on that one. I'll start with the political violence. You talked about that. We had introduced that product in Zambian market. A number of brokers appreciated it, talked very highly of that, but not even one policy was sold. It was specifically for motor vehicle. Then, as you rightly said, we have very little uptake on terrorism cover. It's only few multinational, we can't mention the names here, they take it. Now, why uptake is low here? You see, terrorism thrives on big impact, big publicity. Is something bigger affected. Now, most of our businesses here are micro to small scale industries. So impact, I don't know whether it's on this forum I can talk, is like in Kenya it happened, what happened there. So those kind of institutions, those kind of outlets, malls, stadiums, those kind of activity they attracted. Now, having said that, Zambia has been an oasis of peace. We don't get into controversy things. And our demographic also is a very balanced, demography. So some of those reasons also there that we didn't have the incident. Having said that, emerging risk, anything can happen anywhere because they look for soft corners, soft places, the ideological people mindset. So we have to sit down. We definitely have to bring that to the fore, and especially the commercial institution, to the government side, and work out some plans. Maybe a pool we have to create to encourage them to take this cover. Maybe we have to do the pricing right with a very low margin. So build it up, because insurance is all about cash flow management. Either you pay in the front and then you recover over a period of time, or you continue getting the premium, build up the fund, and from there you pay the claim. So we'll have to take some approach. We'll have to, put some money aside from our profits, a special pool, special fund, and develop this business, because the consequence of this is here: the loss of jobs, the economy. So it being a known unknown in Zambia, so there's no denying the fact that we have to work on that. We have to be proactive. We have to work out a mitigation plan, create a fund for that, and then go flat out. But this cannot be announced. This product cannot be put on the newspaper. It cannot be on the radio station. It has to be one-to-one interaction and working out, because this has to be a very different, by the side kind of discussion.
It's a very
That's what I
sensitive.
can say about political side. Yeah, it's a sensitive issue.
Yeah, it is. Actually, in 2013, the Westgate attack, I think there was an insurance claim of about $150 million. So Kenya is not far from us, and that's one of the examples actually which comes to mind when you talk about PVT. Any comment, Madam Barbara?
Well, as Chaula put it, in Zambia, the uptake is very low. And the reason why it's low is because a lot of times we actually distance ourselves from it, or we actually fail to accept that it happens in Zambia. We keep assuming that we're a peaceful nation. I mean, we've read so much about Kenya, and yet we did nothing about it. And the moment it was happening in Kenya, especially the attacks which were in the malls, we saw a lot of reinsurers, both the local and international ones, come into Zambia and tried to sell the same products to the insurers so that we could market it. But it didn't work. The uptake was still very low. I think we need to start by creating awareness, and after people get to understand it and what it covers, then they'll be able to take it up. But at the moment, it's not something which people can actually call you and ask about it, or ask you for what it covers or anything like that. We don't even receive inquiries on it.
All right. So I've got a question from George Chanda as well as Vines. Before going to those questions, Mr. Chigwende, what would be your take on this?
I think my colleagues have really articulated, the aspects that are actually, affecting our particular industry. But as it was pointed out, terrorism is not an easy product to sell, more so, to talk about it and so forth. There are sensitivities, surrounding it. But my take would be perhaps to lobby for a situation where we've got compulsory, covers, on terrorism, especially for places where people congregate. Most of the time, the stadiums and churches, like what my colleague was saying. I think it would be very, very important to have such covers purely on public interest. Thank you.
Could I say something on that? One point I want to add.
Yes.
You see, much more important than selling the product is risk improvement. Because we are, as I was seeing one of the questions there, that we are expert in risk management. Improving the risk, our malls, the way I see there are no cameras there. And if cameras are there, they are not working. And those cameras, I see them very primitive kind of cameras. There is no audio there. The security guards there, those are not very well trained. There is no monitoring. The car parking has like a hazard there. The shops, anchor shops, are so congested. Only one exit, one exit and entrance. So risk improvement is a cardinal point on that. You see, if things are done properly, you can fend off that attack, because at every stage you monitor, detection. Like when it happened in Kenya, they had scanners, they had X-rays. I'm not going to that because we have to balance public and private privacy and this thing. But there's so much can be done here to improve the risk, to avoid the occurrence of this. That's the cardinal point we have to work on. Then selling the policy, selling the product. Product can be backup kind of thing.
Awesome. All right. Let's touch on one emerging risk, which is a distribution channel threat. So it has been argued that insurance is threatened by other providers such as a company, now Amazon, and therefore qualifies to be an emerging. So do you agree with this, and what could have led to this position? What measures should insurers take to ward off this emerging risk? I know it's It's a contagious one. Let's start with Barbara. You want to go first?
Sure. I will say yes and no. I say yes, and I'll give my reasons. When you look at the tech companies and you look at the the financial institutions, they are really not insurers, and they're not supposed to operate as insurers. They're simply supposed to be our distribution channel for a simple reason. They're not registered to sell, they're not registered to be underwriters of insurance. So even the products that they sell, really, they're underwritten by the insurers. But what has been happening on the market, well, I should just say worldwide, is because when you look at their distribution channel, or when you look at the way their businesses are set up, we'll take the financial institutions, for example, they have the volumes that the insurance companies are looking for. And they've already done, they know your customer, they already have that data. And we already talked about cyber risk. People do not really want to give their data to a third party. So they would rather they would rather buy insurance through a bank online than directly from an insurance company, because they've been with this bank for so long and they trust the bank and they feel it has to be genuine. And when it comes to the tech companies really are supposed to be a platform that's linking the insurer to a partner like the mobile network, the mobile providers, the MNOs, to a partner like maybe even a financing institution. We need that interface. We need our system to interface with our partner's system. And that's how technology comes in. That's how come that IT company comes in. But because they've realized that this is the kind of, like, it's easy to sell when you're using such platforms, because really when they come in, you discover they're also using the MNOs as a platform, or they're connecting you to a bank. They realize that the volumes are there. So automatically, and then they realize that the insurance companies don't have that kind of customer base or the technological skill that's required. So they come up with a high commission rates, where you'll find a financing institution is getting a commission which is much higher than what the underwriter is getting. And that poses a threat, because then the underwriter will not be able to service the customers properly, or they'll be servicing the customers but at a loss-making scheme, because obviously you're paying out so much to someone who's not even carrying the risk. So I say yes, based on the fact that we have partners who are coming in front and posing as insurers, which is okay, provided they realize that they're only supposed to earn a commission. And I guess we'll talk about it when it comes to regulation. The challenges that we have is that we don't have regulation which says we're going to cap your commission up to this percentage. So they're bound to act as insurers. And as insurance companies, of course, we view it as an emerging risk, because we really don't have the power to say we will not use them, or to ignore them, because we want their customers as well. Thank you.
Awesome. Webster, you would like to come in?
Yes, thanks. It's actually a very interesting aspect. My take is that these platforms or these financial institutions are just coming in as distribution channels, and we find ourselves now talking about them as being the elephant in the room. It's actually something, an indictment on our part. I think that, yes, they are posing a threat, these institutions, and there are reasons for that. Number one is that as an industry, perhaps we've been very conservative in terms of innovation and so forth. We do not see much. Just, I think yesterday also I was hearing on news, a bank being awarded, is it best digital bank and so forth. But it's nothing to do with their banking, but a digital process that they embarked on and so forth. So we need to be innovative And then also the other aspect is that we need to strengthen our laws, I think, to create the boundaries. A few years ago, there was a huge discussion whether medical insurance should be fall under PIA or pension, or should actually be something be overlooked by the Ministry of Health and so forth. So we need laws that actually define the boundaries, who is core, who is incidental, who are the players, who are the spectators. I think these things need to be clarified. And then also a lot of misconceptions about insurance. We need to work, I think, on our reputation to clear those misconceptions, because if we talk about banks trust and so forth, it means that we are not doing much as an industry to make sure that those misconceptions dissipate. And lastly, which I think from a strategic point of view, we need to up our game in terms of structuring partnerships. I get shocked when I see that these distribution channels are actually getting more money. The commissions are higher than what is actually coming to the insurers, the risk carriers. So in our negotiations, the balance of power, I think it has to be, looked at seriously to say, if we are going to have this partnership, is it not going to choke us in terms of the margins that will accrue to us? So these are the things that I think, as an industry, we should seriously look at. Thank you.
Awesome.
Thank you, Webster. I agree with Barbara 100% on the first portion, because our penetration of insurance is very low in Zambia. Whatever figures we are giving also, it's not even half of that, because we have too much fronting. If you take out the fronting, the engineering and fire, our penetration is less than 1%. Now, this alternate distribution channel, even technological, sites, which is consolidators selling insurance, in fact, it will increase the insurance awareness, it will increase the insurance penetration. So it's an opportunity. As Barbara rightly said, if I go to my bank, I trust my bank. They know me, I know them. We have a relationship. If he tells me, Mr. Chawla, you have no life insurance. You are such a business, you need life insurance. If something happens to you, business has to continue. You need key man insurance, or you have to protect your family, your loan. Something happens, we don't want to grab your house, which you are given as collateral. Let insurance company pay for that loan, and your house is still safe. So they can convince, they can talk, and people listen to that. They are an aggregator for us, actually. They will be bringing more business to us. So we don't have to be feeling threatened by them. Penetration will increase. Ultimately, one way or the other, business will come back to insurance companies, because they are not insurer. Unless they start an insurance wing, ultimately, again, is coming back to insurance. Insurance mechanism will be growing. That's number one. Coming to the commission side, if you give me permission, I still have passion for that. I still want that if somebody can take it up. Barbara said very rightly, there was a bank here. On credit life is the most profitable business. They were getting 65% commission. That's taking money by false pretense from the borrower. We have one life insurer, a very reputable person, we know all of them. He bought a furniture from one of the company, and he paid 11% premium for 1.5 month installment payment. And we said, you are insurer and you're paying. He said, oh, my children were happy, so I bought it. I didn't notice this thing. So yes, there is a kind of exploitation by this so-called big thing. But that's fault lies with us. If you are paying higher commission, you price it accordingly. That's number one. Number two, disclose it. Why didn't we lobby to PIA, to the government, that when these fellows are coming, first of all, there shall be license, there shall be disclosure to the client. Client shall know how much he's benefiting by way of selling that insurance. If he says, I'm getting 65% of that or 60% of that, client will say, sorry, I'm not giving you that. You're not the risk carrier insurance company. So get me discount on that premium. That means your loading is too much on the premium side. So solutions are there always, as long as we are proactive, as long as we have the consumer interest. As insurance also mechanism, we have to become a adding value proposition what we are giving, and we stick to that. We are ethical, it will work. So these channels are not a threat to us. They are complementing to us. They'll increase penetration. Ultimately, the benefit will go to the consumer. Because banks are there throughout Zambia, I will personally feel that as many channels can be opened is good. Point of sale, selling through bank, insurance, through cooperatives, through post office, wherever it can go, as long as there's a proper rule, proper regulations, and consumer interest is protected. That's all. Thank you.
Awesome. All right. So as we come to the close of our discussion, let's take a few questions. Then, so George Chanda says, risk analysis and crisis planning being the core business of insurance companies. Are you predicting post-pandemic, and what is the game plan in dealing with the same? Quick answers from the panel. Anyone can jump on that.
Okay, I will take it. I think what happens usually in any a pandemic and so forth, first people panic, and then there is a stage where they monitor, and then come back now to their normal being and so forth. So we are in the process. I think first of all you find that people, the natural reaction will be to start issuing maybe endorsements to say we are not covering this and so forth, and some will continue to provide cover and so forth. But post pandemic, it could be that maybe this particular disease will be there with us for a long time. So the issue now will be the new norm, that everyone else is talking about. I could give an example. I think when HIV/AIDS came into being, many people were shying away from even providing cover for that. But today, we actually have got, life policies which cover HIV. So I foresee a situation whereby we will also be having policies which will be covering, this disease. If ever it's going to be there, suppose a solution is found, we might not be talking about it. So I'm very, very optimistic that there will be relevant products. Already we have seen that some companies I know of, I think in Japan, there is an insurance company called Taiyo Life. I think this September, they will actually be launching a COVID-related policy, I think more to do with hospitalization costs. And also a company in Uganda also is offered something along the same line. So progressively, we are going to see a lot of products being churned out, if I may be optimistic about it.
All right, awesome. So we have Kolezi Shirwa, powerful panel, so much knowledge in one place. Great to see that such fit even just for a few minutes. The combined experience of about 60 to 70 years collective is here. So you're right, Kolezi. Tamara is following. Now, Minchimunya, greetings to the pan informative program. Thank you. Watching from Kitwe. Vines Banda Mwale following. Vines has a question. I think this will be directed to Barbara, who offers these poor member Simjangombe awesome insights. Let's get Barbara to answer that question. Anyone on the panel on who offers visa cover in Zambia?
It's actually taken up by the bank, and most of it is actually being offered abroad. But if you contact your bank, definitely they will tell you that your visa card is covered. And in case you made a transaction using your visa and you were like you didn't complete it, or someone transacted on your account, if you contact your bank, they should be able to give you back your money. We had the visa team come to Zambia, and we had extensive discussions with them, but we didn't conclude on them. In fact, we're not looking at it as covering the money, because obviously it's being covered by short term, it's loss of money. But on the life side, we just wanted to embed it with a life cover, where if probably the person who holds a visa card is traveling, they can get free travel insurance. But otherwise, I'm not aware of a company doing that in Zambia. Maybe Webster would know, being a reinsurer.
No, Barbara, I've got no idea who is providing that product.
Okay. All right. So as we come to the end of our program, I would like, maybe in the conclusion, I'll pose 3 questions as a way of winding up. So firstly, how should customers prepare themselves for these emerging risks? Then how should insurers prepare themselves for these emerging risks? And how should regulators handle or manage emerging risks? So I'll go firstly, customers preparing themselves. Maybe Webster can take that. Then how should insurers prepare themselves, Barbara? And then Mr. Chowder, how should regulators handle or help manage these emerging risks?
Thank you. I think when it comes to customers, I think there should be a realization that some of these emerging risks actually cannot be dealt alone by insurers. So it starts with them also being involved in risk management. At personal level, people should also learn to do savings, their life policies, to assist them with that. And when it comes to companies, they should adopt enterprise-wide risk management systems. And then insurers who take up the balance of the risk, and to the extent that they can, because admittedly some of these risks now are fundamental in nature, and they cannot be shouldered only by insurers. It will need probably also government involvement. The other thing is that they should also have business continuity plans in place. You see, when things like this pandemic happen, they should be able at least to operate for some time, not to say that very same day, then they close their doors. So it's important that they have these business continuity plans, and also encourage them to take these policies that cover emerging risks. This notion that these risks are quite remote, cyber risks, terrorism, and so forth. I think it's time that they be proactive, so that they can protect themselves. They can protect also their assets and their financials. I think that's what I can say in a nutshell.
Awesome. So as Barbara, as you're responding to my question, there's a question that has come through from Kondwani Ziambo. Good evening, panelists. Why is it that most, if not all, insurance companies no longer offer personal medical insurance? Most of them only cover companies, and I mean it.
Yes, it's true. A lot of companies just offer corporate covers, and for a simple reason. Obviously, it's very easy to manage a corporate account than an individual account. The other issue is when you look at individual accounts, I think they're actually very expensive when you're administering them on a small group. So you need to have volumes. I know that there's 1 or 2 insurance companies that came up with individual medical covers, and the volumes were not that high. And when you look at medical, really, the loss ratio is quite high. So if you are servicing a very small group, you are most likely going to be in losses for a very long time. But I think in Zambia we're improving, and we're coming up with medical aid. We also have the government health system, which has come on board, where people have actually started paying towards that. Very soon, I think in the second phase, you will see that insurance companies will be linked to that plan, and you should be able to actually access the other hospitals that you are able to access if you take up the insurance cover. So we don't have a lot of medical aid in Zambia. I think that's the reason why, and we're just dealing with it based on corporate level. But things are changing. We should be able to get a number of them on board soon. And can I? Oh, sorry.
Yes, the other question?
The other question was on insurers, on how they can actually manage the emerging risks. Obviously, it's about having a framework that you're using to continuously monitor what's happening in society, to continuously monitor what's happening demographically, and identify the risks. And after identifying the risks, you need to study them, assess them, and come up with ways in which you're going to ensure that you mitigate them, you control them, and even after that, you have to continuously keep monitoring them. But as insurance companies, we also need to learn how to move fast. I think when COVID came on board, we didn't react very quickly, probably because we thought it would not hit us that much in Zambia. And we kept asking whether this policy actually covers COVID or not. And then that's when we also started adding COVID to certain products, because we realized that most of our life policies actually did not have it as an exclusion. So now we had to go to the public and tell them to say, hey, COVID is actually covered. So I think if we're moving with time, or the moment that something comes on board, we're quickly able to come up with the solution for the public. I feel that it's going to work out both for our customers and for us as well, especially that we're in a space where we're saying insurance penetration is so low. I think that's part of the reasons on how we're going to grow fast, by actually adapting to change very quickly.
All right. Awesome. Mr. Chawla, how do you wrap it up?
Webster, you are giving me a very difficult task.
You have
Okay.
32 years experience, so you are an oasis of wisdom and knowledge.
Don't put me to sit on a bush and fall there. Okay, let me honestly say, the regulator has to play a very, very critical role here. You see, Insurance Act was passed in 1997. We don't have regulation, even one regulation till today. If we had regulation, what Barbara and Webster were talking about, insurance commission being paid high to those, distribution channel, than brokers, than agents who add more value, and we're not taking advantage of that. So we don't have regulation on the banking side. We don't have regulation that disclosure side. Now coming to the post-COVID-19, I'll give you one or two thoughts on this thing. Solvency will definitely be affected. Liquidity will definitely be affected on insurance companies. So the regulator has to be very, very proactive, very listening, understanding, sitting down with the industry and find the way forward. There are solutions there. We don't want insuring public to be unnecessarily overburdened, because their resources are also gone. Some of them don't have employment, some of them don't have sales, the revenue is gone. So everybody is affected cash flow wise, everybody is affected profit wise. Solutions can be very many, and they'll be very controversial because nobody wants to give away. Coming to regulator, I'll give you one or two examples. Kwacha has depreciated by 280% during last 9 years, 280%. Our motor price premium is still the same, 450 Kwacha on car. Court judgments are at least 6 times of what I used to see 30 years back, 20 years back, even 15 years back. They are giving judgments now 900 Kwacha per week for a minor injury. 15 years back, third-party limit under Road Traffic Act was 18,000 Kwacha for bodily injury. Then it became 30,000 Kwacha and 6 Kwacha, 30,000 6 Kwacha. Now it's 50,000 and 10 Kwacha. The premium are stagnant. So it's a wake-up call for the regulator also, that they have to do something for the industry to balance it, so that we continue paying genuine claim efficiently, timely, and expeditiously. Otherwise, people are finding excuses. Industry as such is going down. The second thing, shareholders are looking for return also. In my personal view, it's a criminal not to make profit, because when you make profit, you plow it back, you create more jobs, you create more economic activity. If you're making losses day after day after day, eventually resources are limited in the society, capital also, human also, minerals also, water also, everything. You are wasting those resources. So it's a wake-up call that everything shall be efficient. Technology has to be adopted, as Barbara was saying, from the insurance side. So regulator side, I'm requesting, please sit down with the industry, see their solvency, and find solution how to make them strong. Closure is not a solution. Closure will be disaster. More people on the road, more family without food. So find a solution to give them. There are solutions, very easy solutions are there. Fronting. Why we are allowing fronting to go day in, day out of the country? It's economic sabotage. Somebody takes away 300 million kwacha out. That 300 million kwacha remain in the industry. The reinsurance commission we get, the broker get the commission 20% or whatever premium we give. That is plowing back in the society. That's economy. So some of the drastic steps they have to take is a wake-up call. We can't have one-way traffic. We borrow the money and pay them back insurance also, pay them profit also. So that has to be something they have to sit down with industry. They can involve other institution involved in that. Fronting, the pricing, and solvency, these are three issues we have to work. And introduction of new products with the right pricing and the right way of distribution. On top of that, I'm saying even post COVID-19, before that also, why can't we create pools? They have to encourage pooling of resources, pooling of risk instead of taking it out. COVID, let's say as your company professional would have said, we'll put 2% of our capital or 2% of our profit to this pool. Webster Reinsurance would have said, I will put 1%. I would have said, I will put 1%. Barbara would have said. So that pool would have become big. NAPSA would have come in there. Because there are a lot of people who are without job. Industry is suffering. A lot of companies are suffering. Small, micro, and medium enterprises are suffering. So there has to be some pooling of resources. Like Germany can come out with a solidarity fund. Why we are not coming out there? So regulator, whichever organizations, they have to, organs of the government, or regulator, or the industry association, they have to come up. Not just talking. Just talking is not enough here. This is an abnormal situation, and solutions have to be quick, fast, and very considerate for the majority of the population.
All right.
Small, micro, and individuals. Thank you.
All right, thank you so much. There you go. It's been an eye-opening session. As Soka has said, eye-opening discussion, please. We need more of this. Definitely we will. Then Caleb MTA says, replying to Soka, I agree. Information sharing transforms the industry for the benefit of clients, especially on those emerging risks. Victor Jalaban says, spot on ACK. Oh, ACK, I'd forgotten about those initials. Spot on ACK, change must be absorbed at all levels. Serious wake up for a changing environment. So there you have it. So this has been Preston Leadership Forum. Today it was a special session where we were featuring insurance experts with cross-cutting experience. I mentioned earlier that the combined experience is close to 70 years. So I'm sure you've been able to get a few or a lot of things from this discussion. And we'll be bringing you another one in 2 weeks' time, right here on this platform. So to my guests, thank you so much, Webster, Barbara, ACK. Thank you so much for joining us this evening. All right, so from me, Webster Twambo, the chairperson of the Preston Foundation, thank you so much. Until we meet next time.